Feroze Azeez, joint CEO Anand Rathi Wealth Limited, joins us right now to throw in some light on this development. Feroze, thank you so much for joining us today on ET Now. Now, HDFC Mutual Fund today has put a cap on large lump sum inflows into its gold ETF and a monthly limit on the fund. In your reading, what's the primary trigger over here?
Primary triggers. Basically, investors behave in a very biased fashion. Whenever something runs up is when everybody starts talking about it. Before it runs up, there's nobody who's asking for it. When Bitcoins run up, and then people buy, right? When Nasdaq ran up, post which people bought. Look at gold. Gold had a rally in dollar terms from $1,700-$1,800, one-way rally to $5,600 in Jan this year. And you won't believe, when the gold price were 1/3, just 2 years back, there was just 30 crores which came into ETF. But when the price was in Indian rupees almost 1,75,000 rupees per 10 grams, we got 24,000 crores. Yes, from 40 crores or 30 crores when it was low, people bought it at that peak price and they're at a loss of 2,000 crores. So one big motivation of an AMC could be to not allow people to buy something at the peak. That's one. Second, today gold prices in India are still high because of the rupee depreciation of 8% in this financial year. In this calendar year. And the second thing is import duty has also created some arbitrage between gold globally. Otherwise, gold globally is down 20% from its peak in spite of a war. This could be. And third, I think I'm sure HDFC being a responsible corporate, already we have 4 crores of gold in Indian households. 4 crores. And ETF is about 1,75,000 crores. Why does India need more gold when you have 4 crores, which is 28% of Indian household savings and 20 times more than equity mutual funds, or at least 16 times more than equity mutual funds?
Now, Feroze, tell us, are funds seeking to lower exposure to gold as an asset amid the volatile global markets as a fallout of the West Asia conflict?
See, this time around, gold has given a surprise and a shock to everyone. What it has done is, every time for histories, for years, decades, if not centuries, people have believed during bad times gold will support your portfolio. This is the first time, and I predicted this in January in a few channels, maybe yours as well, I don't recollect, that this time gold will behave differently. Gold is not behaving like gold. This is the first time in the history there is a war of this nature and gold is down 20%, $5,630 per ounce is the peak in January. Today we are sitting at 4,500, which is a 20% fall. It has never happened that gold is not at a peak during the biggest crisis. So gold, to come back to your question, I personally think crisis has a role on gold, but it has been just the opposite. Every day after the war, most of the days, equities and gold have behaved in the same direction, which has not happened, especially in the war. So war has had an impact, but a surprisingly opposite to what was predicted always.
Feroze, how do you expect the Indian equities to fare in 2026? How is the risk-reward ratio between the both?
Your hopes are least is when the probability of an asset doing well are the highest. Mathematically, equity is something which I would definitely bet on today. Why? Because people don't even notice that in this century, from 2001, FI 1 and 2, there have been only about 6 instances where equities Nifty has been negative. 2-year FI 2, FI 9, FI 12, 16 and 20. These were the years, but Nifty for 2 financial years have never given a consecutive negative return. So if data has to be extrapolated and the same thing happens like it has happened in this century, we've already had one negative financial year, which is the last one for Nifty, and the next one may not be negative. So that's why you see we started the year on a very big trough, which was 22,313 for Nifty. We are already, after all this pessimism, we're still 4-5% higher. I wouldn't be surprised if Nifty gave more than median returns for this financial year, which implies that equities can reach back its peak of 26,000. I wouldn't be surprised at all. The odds are in the favor.
Feroze, you're also running the campaign to sell gold. What is the thought process behind it, and how do you see that faring further?
Yes, I think, anything which can be solved collectively, easily, should be attempted to. Because if your total gold we have is 4 crores, okay, and we're going to get, let's assume last year we brought in 7 lakh crores. That was almost 1.5%. So if all Indians sell 1 to 1.5% of gold, we will not need gold import. Balance of payment, which is the difference between how much I need as dollars and how much I'm going to get, and difference is expected to be $65 billion. $65 billion can be easily solved if gold comes out of the lockers, and gold bars and gold coins are sold to book profits. So I personally think there is a lot of traction. A lot of people on social media have sent me receipts. My clients have supported. They've given testimonials. One person has unwound on this call of booking profits on gold and helping the country. He has unwound 88 crores of ETF and given me a receipt also. So I think we've already reached about 125 crores of exits. And if we are able to solve, as Anand Rathi, about 3,000 crores, we would have solved 1% of India's problem as a small group of 403 relationship managers. So one is, all of us sell 1%, we've solved India's problem. If that doesn't happen, at least Anand Rathi controls 13,800 clients' monies in terms of influence, if not controls. So we can influence them to book profits. If Nifty tripled tomorrow from 23,000 to 72,000, will I ask my client to book profits and rebalance his portfolio? Of course I will. So why wouldn't I do that for gold? And that's what I think any rational person should do, and not become too emotional and say that gold will only go one way, up. So book 1, 2, 3% of your profits, which is not too much to ask for, especially in the name of patriotism, beyond just I think all of us need a method to express our patriotism, and this one is very mathematical and makes me feel happy that I could stand by the country when the currency is depreciating.
Right, absolutely. Now, if we are seeing HDFC, one of the largest fund houses, putting brakes on gold subscription, does that suggest that other fund houses might also follow the same? How do you advise investors to position their gold allocation from here on?
Yes, I'm very, very happy and excited that she has done that. In fact, on one of the channels when this whole thing Abhiyan started, I proposed that AMC should stop accepting gold. Gold is there enough, right? We are not, as an industry, here to sell what sells. We have to make asset allocation correct. India has 28% of their money in gold and 1.8% of their money in equity mutual funds. And even the mutual fund guys want to support gold's infusion when it is 28% and equity mutual fund is 1.8. So I can't be grateful to Mr. Navneet Manod, who is the CEO of HDFC AMC, and all the colleagues there, industry colleagues there, who have taken this behel, and I hope people follow suit. It's a message to the country that you have enough gold. Don't buy something which you already have in this kind of quantum. I've not met anybody as a household who does not have gold, right? So equity, there are 2 crore people, 1.75 crore people. I was speaking to Navneet sir yesterday, and he said they have 1.75 crore unique investors in HDFC. And there are about 5-6 crores only in equity mutual fund. But if you calculate the same thing for gold, it will be 60-70 crore. Indian gold will at least have 1 gram of gold. So I think I'm very happy HDFC has done this. Second, I pray to the Lord that this happens across the industry, because Indians have an asset allocation which is lopsided towards real estate and gold.
Right. Thank you so much, Feroze Azeez, for throwing in some light on this. Now, moving on.